Cashflow Diary Podcast, episode 350.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the Cashflow Diary Podcast. I am your host, Jay Massey, and I'm glad that you're here today because we are going to talk about cash flow in a completely different way than we have ever talked about cash flow. And most importantly, it might actually be something you could do today because there's many forms of cash flow. It comes from many different things, but ultimately at the base, there must be an asset that is being utilized to generate the cash flow. Well, one such asset that we have never talked about, to my knowledge, are royalties. You're like, but Jay, I don't know how to sing. Yeah, I understand. We're not talking about that right now. It's not about your ability to sing. But what if there was a place where you could buy and actually sell those things? That would be kind of interesting, wouldn't it? Well, I have with me today a gentleman who has done exactly that. He's part of an organization called Royalty Exchange, and more importantly, it creates an opportunity for you, for me, for everyone who might actually want a completely different type of asset than you may have ever considered. I have with me none other than Jeff Schneider. He is currently the president and CFO at Royalty Exchange, an online marketplace for buying and selling royalties. So you might be actually asking yourself, what is a royalty? So we're definitely going to make sure that we ask Jeff that. And just so that you know, he's got an MBA from Purdue. And here's the thing. He really likes numbers. So don't get lost in the numbers, but let's make sure that we get all of our questions answered as we focus and learn all about royalties, how to buy them, how to sell them, and how they can create your own opportunity for cash flow with Mr. Jeff Schneider. Jeff, you there?
I am. Thanks, Jay.
Thanks for being here. I am glad that you are here. Long time no talk.
It has been a while. I'm excited to talk to your audience today. I think it is definitely something you haven't talked about on your podcast, and I think it's a unique opportunity. And I'm happy to join and share any knowledge I can with you guys.
Perfect. Okay, so before we get too deep, though, what I'm going to do is I got to ask you the same question that I ask everybody the first time that they're here. Are you ready?
Of course.
All right. So I tend to look at today's entrepreneurs a lot like yesterday's superheroes. You know, Batman, Robin, Wonder Woman, because she's got a movie coming out soon. And I think entrepreneurs and superheroes have a ton of things in common. You know, occasionally we get dressed up. Sometimes, you know, maybe we actually do wear tights and capes. I don't know. But what I do know is that we use our skills and abilities to go out there and serve other people. But also, like superheroes, entrepreneurs have a beginning. You know, if you think about it, SpiderMan, before he was, SpiderMan, he was just a college kid going to class and taking photos. Pretty much it. Then something happened, and then he became SpiderMan. So my question to you is, before things at Royalty Exchange, before the idea and the concept of being able to buy and sell royalties, because you got to admit, that's not something you hear every day. Before all of those things, what we want to know is, who is Jeff Schneider?
Ooh, how much time do we have?
About 40 minutes, but go for it.
I'm kidding. That's always a complicated question. But I think, I would say in terms of cash flow, I've always been focused on understanding cash flow. And I think it's really relevant to you as well. And you probably understand. But before I had heard about Kiyosaki, before I had, fully understood how all of business works, I remember back as a teenager, I was trying to figure out, I was going to vending machines around high school and trying to figure out how they worked and how the money flows and who's making money on that. Is it like the Reese cup that I buy, or is it, somebody else? And so I was always curious of just how money flows and who owns this and who owns that. And I think as you compound that for years and years and experience after experience, and suddenly you come up with something like royalty exchange.
Well, here's the thing, though. I mean, when you go around, like if I go around or someone's coming to us for the first time, they go, Jay, I want to make cash flow. Jay, I want to build a business. Jay, I want to do these things. Never once has anyone said to me, you know what, Jay, I want a whole portfolio of royalties. Now, that doesn't mean they shouldn't be saying that, but no one has ever said that. So there's got to be a genesis to, what is the road that leads you to go, okay, royalty exchange?
Yeah, it's an interesting progression. I think most people as investors, they start out and they're interested in equities. That's everybody hears that's the first thing you do. Mm-hmm. And, so of course I was doing that when I was in my mid-teens. And then, but how often does the stock market burn you?
Okay, hold on. Did you just say that you were buying stocks in your mid-teens?
I was. There's an interesting story that I would hope is beyond any of the SEC regulations at this point. But I used to work at a golf course, and I remember the members when I was caddying. They would be talking about stocks, and so What did I do? I took some of that caddy money. I went over to a Scott Trade and opened up an account and bought some of the stocks I heard them talking about.
Wow.
So, who knows if it was insider trading? I don't think it was, but hey, it's that's how I got started.
I love it. Okay, that was your news source, not the headline. So this is good. Please continue. There's more to this story that I want to hear.
Yeah. So I think equities is where most people get started, and then as you start to realize that there's a lot more risk with equities. So then you start understanding how like I said, how cash flow works and how to differentiate asset classes. So of course you turn to maybe more of the debt market or the bond market, but or real estate, for example. That's, I know, a big part of your portfolio. And the way I looked at it as I was investigating and I was moving up the what I call the value chain in all of these, mm-hmm. is with real estate, even you have to put a roof on it every 7 or 14 years or whatever. And so the moment you spend capital to acquire it, but then you still have to put more capital in on a consistent basis in order to maintain it. And so eventually, running through the series of questions, I started understanding oil and gas royalties is the first thing that got me into this, understanding mm-hmm. royalties, but then really seeing that royalties are attached to all of these different industries. They're everywhere. They're very common. And it's just something that it's a unique little space that not too many people are familiar with.
Yeah, I agreed. It's not common knowledge. And oftentimes when it is brought up, it's usually brought up in the context of sports or the arts. And then, yes, eventually oil and gas, or maybe even books or movies, et cetera, sure. in some way, shape, or form. So, if you can, give us your perspective. Like if someone was to come up to you and say, okay, Jeff, what's a royalty? What would your answer be?
The easiest answer is a royalty is just a slice off the top. It's a slice of the pie before anybody else gets theirs. And I think, that's why I was always attracted to it, is when you look at it as an equity holder, it may work out great for the business, but if you're looking for cash flow, look at Apple, think of all of the profits that Apple generated in the last decade, and then realize that I may have to fact check me, but probably just within the last 18 months, maybe 2 years, they finally introduced a small dividend and they pay about a 1 or 1.5% yield, right? And then you look at the bond market where at least you have a contractual obligation to cash flow. But you're still at the risk of the business operating. And so royalties are really at the top of that value chain. It's a cut of the revenue. As long as the business or the asset has the capability to generate revenue, you keep getting paid. And that's where I view it as the top of the value chain for a lot of investors.
Got it. Got it. Now, for those that may not have been familiar with, when you said that, Apple is just now getting to the point of where they're paying a dividend or that has a very small yield, could you unpack that as to why that's significant relative to what if there had been a royalty attached to some of those sales?
Sure. Just imagine if you received a penny for every iPhone sale that happened.
Yes, please. I'll take it. Sorry, you got me a little excited with that one.
Exactly. And so a penny doesn't seem like much, but if you're getting a penny off the top versus whatever percentage of the bottom, this is after the executives get paid, after the government gets paid, after all the interest holders get paid, and then the shareholders are still at risk of the board not approving a dividend. So it could work out really great for a company, but not great for shareholders. And I think I just kind of kept looking at that saying, well, something doesn't seem right about it. If it's generating this much cash flow, why don't I get more of it?
Totally understood. In fact, I'll take half of a penny if that's okay.
Yeah. I'm sure that math would probably work out better than people who have been shareholders, actually.
Totally understood. Totally understood. Okay, so in essence, what you're saying is that, in your opinion, royalties present themselves as a superior asset to many other options available. Yes?
I do. Yes.
Okay. So what makes them, in your opinion? So we're going to go down one by one. I think we kind of covered the equities idea, but what makes it superior to say debt or debt? We'll leave it with debt for now.
Sure. So debt is, like I said, it has a contractual obligation to it, which is good. There's a stated interest rate. But there's two things that it doesn't have. And that is, one, it doesn't have upside. And two, it still puts you at will of the company being able to pay it. So they may be just wasting money in all of these different places of their business because they're not focused, or all these things that, as an entrepreneur, and I know that I've made all of these mistakes.
No. We are perfect. 100%.
Of course. I wish I could say that, actually, Jim.
Actually, I don't wish I could say that, and I'm glad I can't, but I hear where you're going.
Yeah. But, so the company can lose focus, and it could actually lose its ability to operate just because its debt exceeds its cash flow and they have to go into bankruptcy. And it could be a great business. It has the ability to generate revenues, but they just were mismanaged. So basically, if there's no upside with debt and, it could still be mismanaged, there's that third party payer issue that you run into.
Okay, so I get the counterparty risk of what you're saying in the
That's the word I was looking for, actually. Thank you, Jay.
You're welcome. I'll do my best every time. So, and in essence, what you're also saying is that there's I'll call it an inflation hedge component since it can go up, I guess. If, sales go up, you have the ability to have your income increase. But at the same time, if your sales go down, isn't that also going to decrease the income?
It does. And, so this is not a contractual obligation. So whereas debt has that fixed rate component to it, royalties have that downside risk associated to it. And I think if you look at historical returns, royalty holders are typically compensated for that risk.
Got it. I see where you're going with that. All right, cool. All right, so now we've talked about compared to equities and debt. I've got to ask about real estate. Because, what's up, man? I like real estate.
Yeah, I like real estate a lot too. There's certain niches of real estate which I don't remember if we talked about when we met in person, but I think I do like real estate. I do, but the biggest thing I would say, the differentiator with real estate is that this has, you basically, if you buy at the right price, which of course real estate you have to buy at the right price. If you buy at the right price, this is literally an asset that you don't put any work or effort into. And you and Kiyosaki as kind of the classic definition of an asset is something that can put money in your pocket today without you putting any work into it. And I think royalties meet that definition. Real estate, if properly managed and properly purchased, which you certainly know how to do that far better than I do, meets that definition. But it's just I happen to know a bit more about royalties than real estate, so my energy is dedicated to this.
Got it. And you bring up a great point of investing in what you know. But before we go down that path, what I find very interesting is the understanding that and I'm so glad you're bringing this up, and so that everybody can hear it. I don't care the asset. There is something that requires some form of maintenance in this form of ownership of the asset. Once you have the asset, very, very few assets are 100% hands off, never think about it again type of thing. Now, I happen to have 3 educational courses that are out there in a royalty agreement. So I know a little bit about receiving royalties for sure, which is pretty cool. And you are correct. It does require very little after it, once the asset's out there, it's out there and it continues to do its thing. There's still some auditing though, and making sure that as best you can that you're being paid properly, right?
Yeah, that is correct. So the two pieces of that are who is making the payment, and then making sure that they're making the right amount of a payment. And so the who is making, that's the counterparty risk that you properly mentioned earlier. And I think now, if we isolate to the music business, which is where we spend most of our time right now, the payors are basically quasi-government agencies. So they exist only to collect royalties and distribute royalties. And so the counterparty risk with them is much lower than what you may get with a publisher, depending on what your royalty agreement is, that if they go out of business, what happens to the asset.
Right.
But in terms of are they paying the right thing? That is certainly that is always a debate in the music business, and it's
right.
You've probably seen historical stories about it. Sometimes they make the headlines, but I think that boils down to there are pieces of the music business that have a very defined and structured payment stream, and that's actually for the songwriters. So a lot of the articles and headlines that you see often relate to these recording artists. And Jay, tell me if I'm going down a path that you don't want to go down. But basically, there's 2 main pieces of the puzzle. You have like the labels, which they represent the recording artist. And then you have the publishers, which represent basically all of the work it takes to create the initial draft of the song. So And so those are the songwriters and the writer, the person who just created the music. And so the publishers serve those. And so a long time ago, realized the recording artist is the one that gets all of that public perception. And so the government put in place basically these standardized rates for songwriters to make sure that the recording artist doesn't just get all of the credit and all of the money, that the people who actually created it have some payment to it as well. And so you have that kind of a little bit, depends on which section of the music business you're talking about. And that's one of the things that we try to spend some time on with Royalty Exchange, is making sure we continue to educate people who are definitely new into the music business into all of the different types of streams and how they may evaluate them differently.
Yeah, totally understood. I mean, one of the things that I have been thinking about recently is writing another book, wondering if I could actually get it picked up for this very purpose, type of was more the idea in the back of my head. But at the same time, when you bring up music, I know a guy who used to be like producing music and all these other things, but towards the end of his music career, he started just writing jingles, like I said, for the commercials and all these other things. He's like, I wish I would have started this sooner, because we don't realize, at least I didn't realize until I met him, just how much money they get paid every time we hear Nationwide is on your side. In fact, I probably owe somebody $1 just for saying that right there. I mean, I don't even know. But
well, at least Happy Birthday is now public domain. So
at least we're good now. Yay. But
on that, you're familiar with the actor and singer Mel Torme, right?
I've heard the name. Could not pick him out. Unless
Got it. Well, he's I mean, he was around back in the 40s and 50s. He was an older artist of a classical genre, I guess. But he wrote the song Chestnuts Roasting on an Open Fire. So I won't sing it for everybody, but basically still today, so anytime you hear that song on the radio, no matter who's singing it, it doesn't matter who the recording artist is, Mel Torme or Mel Torme's estate is making money from that radio play.
Yeah.
And it's estimated that he makes $300,000 a year on that song alone.
Wow. Okay, so I don't know about you, but my mind is being blown by this particular opportunity and the numbers. It's absolutely ridiculous. I never thought about it. I'm just so glad entrepreneurs see what we can do. We can just take just about anything and figure out a way to put a business behind it and make it exciting and accessible. Now, some of you may be listening to these numbers and going, man, I just don't have that. I can't make that happen. And I wish there was another way for me to build my cash flow. Well, here's what's going down. If you've been following the live streams, if you've been following the email, if you've been looking at us on Facebook, LinkedIn, YouTube, Twitter, everywhere, you know we've been talking about one thing, and that is nothing other than short-term rentals. You're like, what does that mean, Jay? Well, here's the deal. I've been doing it now, and I'm just like, wow. And I have a number of students doing it now, and I'm just like, wow. And more importantly, it's time to tell everybody about it. So if you want to be on the early notification list and understand how things like tens of thousands of dollars a month can be earned really quickly, how you can be in a profit position within 45 days, because I've seen it happen a number of times now. You want to go to cashflowdiary.com/coming soon. Again, that's cashflowdiary.com/coming soon. Last time, it's cashflowdiary.com/coming soon. Now, let's talk about what's already here, and let's go find out how we can get our hands on some more of these royalties.
Each year, by the way.
That's awesome. I mean, that's an incredible asset. I mean, so let's talk about how royalty exchange, how you actually buy these things, because I'm familiar with purchasing notes, and this sounds like, and maybe I'm wrong here, but you've got to have some sort of time value of money, discounted cash flow calculation in order to put a value on these things. I'm assuming you buy them at a discount and not necessarily at a premium, but I don't know. So talk to us a little bit about how royalty exchange that. How do you buy one?
Yeah, great question. And I think nobody could answer that question until we existed. So I think it's,
exactly.
I think the answer is still being determined. But, a big part of what we're trying to do is bring transparency into the marketplace that it never existed. So
I see.
We know that these like royalties would exchange, people would buy and sell them all the time, but it was, through lawyers. It was in the basically backroom handshake type stuff.
Mm-hmm.
So, as a free market capitalist, if you bring transparency and liquidity into a market, then the value of the assets naturally increases. But in terms of how they're valued, I wish it were as easy as being able to forecast all future cash flows and, taking a discount to that and, coming to today's value. It's not as clean as that. I think in some cases like Mel Torme, you may have the capability to do that where the song's been around for, 40 years. It'll be around for 40 more. But, a lot of the assets that trade on Royalty Exchange now, we have some of those classics, like we've sold some Barry White. We've sold some soundtracks from like Dumb and Dumber. So some of them are.
Dude, I'm looking at it right now. You got Earth, Wind, and Fire on here.
Yeah,
there's brother. I mean, come on, man.
I should have let you know. That's my apologies.
It's all good. It's all good. Keep going.
Yeah, just one thing. Realize it's not necessarily Earth, Wind, and Fire that are selling. Sometimes it's the people behind the scenes. It's the song.
Yeah. I get that. Yeah. I get that. But it's attached to them. That's still cool. I mean, I don't care how you put it. That's cool. Oh, keep going. Sorry, I'm getting all kinds of excited.
No, so it's so as great as we would like it to be, a clean discounted cash flow model. I think the way that these trade internally, the way the music industry has always traded them, is they look at basically the last 12 months or the average of the last 3 years, and then they place a multiple on it, the same way that the stock does a PE multiple, right?
Okay.
And, generally speaking, we've seen multiples anything from as low as about 2 times to as high as about 12 times.
What?
And, it's the Barry Whites that trade for 12 times. And it's some of the music that has more volatility to it or more unpredictability to it that people are obviously going to pay less for. So it's that's basically it's you look at its history, and then you basically apply a multiple to it, and of course the multiple can vary based on your ability to understand it and have a comfort in predicting what its future may be.
Got it. Now, I've got some questions about, enforcement and things of that nature, making sure you get paid in a second. But before I do, I just want to make sure that everybody's on the same page. When you hear Jeff talking about multiples, what he's saying is, for example, let me ask you this. What would be an example of a last 12 months royalty that is traded on Royalty Exchange?
Sure. So earlier this year, we had a catalog of Judas Priest and the Eurythmics, and it had earned about 12,000 pounds or $15,000 every year.
Got it. Okay, so let's say it's $15,000. For those of you wondering, what he's saying is when they trade at multiples, it's multiples of that annual income. So if it was a 2 times, then for $30,000 today, you can have access to, you have the right to receive the income in the future from that time, from the time you close till forward, whatever the terms are, whether it's life of the author plus 70 years or whatever it is. You've got time, that much more time to receive the income from that particular asset for as long as you would like. Am I close to correct in understanding and explaining this to them?
You are explaining it precisely correct.
Perfect. So that they get it. Now, let me ask this, because see, here's the thing. When I've bought notes or sold notes, etc. in the past, here's what I know. Occasionally, like if I bought a note on a piece of property, sometimes I've had to foreclose and therefore I've got to enforce the rights and all these other things. What does that look like? Like, how do I even know, like, if how does Mel Torme know how many times the song is actually being played and someone didn't, hey, you owe me more money? Like, where's the proof of that?
Sure. I think this is something that the digital age has actually helped, and if you look at how it used to work, and how radio play, but basically it's pretty standard in the industry that if you are a radio, if you are a TV station, if you're in the business, you have to submit basically what are called these cue sheets to these collectors. And these collectors are, in fact, they're the enforcement agency that you submit them to them what you played, and then they can then keep track of it. And all of these people do that throughout the world. So, and their full-time job, their value is making sure that they're collecting on, anybody who's using music. So as I've talked to people, now that we've focused more on the music business and I've learned more, even people who own bars, they have to pay into these collection agencies. And if you go into a bar, they have to keep the same way when you go into an elevator and there's like the little permit, these bars have to keep a permit to make sure that,
Wow.
when they're playing music, that they have properly paid for that. And so it's I don't want to go challenge all of your audience to go into the next bar and have them show their permit, but it's in fact strongly enforced anywhere throughout the world.
Interesting. Okay, got it. So then how did you get to the point of going, you know what? I can help other people? Because it's like that's what I like to call that superhero moment. There's a moment where you realize there's something I can bring to the marketplace. I have special skills. I've got something here. Because what was the moment, the thing? When did you get bit by the spider that says, okay, I can use my skills and abilities for good, and I want to help other people get into the royalty game, and here's what I think we can do?
Yeah, the moment would be when I realized that you could own some of these assets that generate 15, 20% yield. And I'm like, how does nobody know about this? This is crazy.
Obviously, it's really easy to have nobody know about it.
So you combine that and then you say, well, why do they trade? Like, why is that? And it's because nobody knows about it. So, of course, it's, the selfish part of you would say, well, why don't you just acquire them in private forever and ever into the future? But I think, if you look at it and say that this is an asset class overall that needs attention and needs transparency and liquidity, then I think it's, that's the moment when I realized, man, these are great assets. They're higher up the value chain, and yet nobody really knows about it. So why is everybody spending all of their time in equities when, in fact, if there was real transparent value in royalties, I think they would be spending a lot more time in those.
Got it. Okay. It totally makes a lot of sense. Totally makes a lot of sense. I'm just amazed that you're making this, making it possible for this. This is something completely different. And so here's a question. When you win the auction on your site, like, do I get a piece? What do I get? A piece of paper? I mean, I don't understand. How do I know it's mine? Do I get a platinum album to put on the wall? I mean, what's that look like?
Yeah, good question. You definitely get the contract that says that you are the proud owner of these. And then you start getting quarterly checks from there. And of course, I mean, in some, we'll send out some gifts or some books here and there, but no, generally, these are also assets that I think are interesting enough that if you're at a cocktail party and you say, hey, a song comes on the radio and you go, oh, by the way, I own a piece of that. I'm probably getting paid. I remember the first time that happened to me, I was eating lunch with the chief of marketing of one of the businesses I used to be involved in, and a song came on the radio, and I go, I mean, the conversation stopped in the middle. Like, I don't even remember what we were talking about at the moment, but I remember just going, hold on. Yep, that's the song. I own that one. And it was, it's one of those things that it's interesting. It's, you, of course, like you said, with Earth, Wind, and Fire, you can buy songs that may be more interesting to you, but then also get paid for it forever, and I think it's a fun asset to own as well.
You've got me all kinds of interested right now, because the only way previous I thought to own a royalty was, again, oil and gas. So I was like, okay, cool. That's going to take some money. That's fine. I can figure that piece out. Or I'd had to create something, a book, song, or, some sort of, licensing deal with my image or education. But this is something completely different, because and I'm loving it. I'm just like, this is awesome. I think this is the greatest thing ever. I mean, and now, so for those that could be considering this as a way to, put some of their cash into, what are some of the minimums? What are some of the lowest that you've seen some of these actually sell for, so that they can go, okay, this is something that could be viable for me?
Yeah, I mean, really, Jay, so far we've had auctions that range from about $5,000, as low as $5,000 and as high as $900,000. On the site right now, we do have.
Did you say as low as 5,000?
As low as 5,000. So I'll have to remember the exact auction.
Wow.
But for example, we sold the theme song to Dora the Explorer.
What?
So anyway, so Dora the Explorer, the cartoon.
I know it. I got 3 kids.
I
am tired.
Right.
It's one of those things, like, it would at least made me feel better that knowing that when I heard it, I'd be like, yay, play it again. Daddy's making money. Yeah.
Yeah. So actually, I would say I think it was Dora and Friends. I know she has lots of TV shows. Sure. And since I don't have kids, I'm not super familiar.
Oh, you
but
will be.
We had that one, and I think it started at about 5,000. It ended at about 13,200. And it's, I remember talking to one of the people who was interested in buying that one, and they said, look, I've got a 4-year-old, and I just want to tell him, aside from getting some of the income, which I know I'll get, but I just want to tell him that I own it, and it'll be cool for me. So we do have some lower priced ones. We certainly have some on the higher end as well. And so it definitely runs the gamut.
That I just think it's awesome. I'm totally encouraged and inspired that entrepreneurs are out there doing the things that we do to bring different things to the market. I've never ever seen this, which brings the question: is there anyone else doing this?
Not in a public forum the way that we are.
Yeah.
And
okay.
so, like I said, they all happen kind of behind closed doors, and that's what we wanted to put an end to, because I think the artist gets, it's a win-win for everybody. The artist may get a little more money. The investors are still making yields that are superior to, the low interest rate environments that they're in right now. And, and so I think it's valuable for all the different parties involved.
I think it's the greatest thing ever. So let's ask this question. When it comes down to, finding out more, because I know right now some people are probably very intrigued, like I have been when talking to you. What's going to be the best next step for them to find out more or get involved, et cetera, and understand more about what you guys are doing?
Sure. I mean, really the easiest thing is just go to royaltyexchange.com. I would encourage them to do probably two things. One is we do have an investor's guide that's available if they just click the investors tab at the top, and then they can register and we'll get them the investor guide. That'll basically break down different pieces of the music business and explain all, a little more depth and detail of what we talked about today. The other thing I would encourage them to do is just go check out the listings. Just click on the listings tab at the top, and they'll see, we've done about 80 auctions since March, and, they'll see what these things are trading for. They'll understand how it may work. And the thing I would say almost all investors that I've talked to have told me is they just kind of watched 2 or 3 auctions to understand how the auction dynamic works, to understand, some of the trade-offs between like why one may go for a higher price and another may not. So just watch, pay attention, and you get to understand a lot of things about kind of how these things trade just by observing.
Yeah, indeed. Totally understood. So with that being said, as we wind down, I've got a question for you that I tend to ask everybody because I want to hear your thoughts on this, because I'm certain you've dealt with these things. Let's pretend for a moment that, there's a person listening who, they have a crazy idea. They think it's absolutely wild. They've never seen it in the public eye, kind of like what royalty exchange is. They've never seen it, but they've been bitten by the bug. They think they want to be this entrepreneur. They know that they can feel it in the back of their head, but also in the back of their head, Jeff, is the voice. And I know you know that voice. It's that voice that comes up every time we want to be greater than our present place, that says things like, who are you to bring royalties to the market? What are you thinking? I mean, why don't you just stick where you are? And for some people, they're actually related to that voice. So my question is as follows. If you knew that the person listening would, in the next 24 to 48 hours, actually take action on what it is that you would suggest, what would you suggest that they do?
You're talking in their entrepreneurial ventures?
Absolutely.
I think without a doubt, the ultimate judge is, are you solving a real problem or a perceived problem? And I think, that is a difficult question to answer, but I would say, I think businesses that solve real problems are ones where, people are shocked and intrigued by actually what it is that you're doing. You have pricing power. One of the things that if you're in a business that is basically in a race to the bottom in terms of pricing, maybe it's just not solving a real problem. And so you can't create products for everybody. Royalty exchange isn't for everybody. This is for, at this stage when we're talking about the music business, it's people who own royalty streams and people who are interested in investing in them. And that's the people who are interested in investing in them is not everyone. It's a new asset class. It takes time to learn about it. Your money manager isn't going to do it for you. It's not for everyone, right?
No.
And so it's if you think you're creating something for everybody to use, that's your first sign that you may not be solving a real problem. And so you have to be able to specifically identify what you are going to change in that person's life. And I think we can certainly say that for both investors and for musicians. But, I've been involved in businesses where that's actually a hard question to answer. And the businesses, here's the thing I will say for those folks, those businesses can work, and they can generate cash flow. But oftentimes they may not be a real business that generates enterprise value. So what you may end up with is a business, a job that generates income for you, but the long-term value or the enterprise value of that business is lower than what you really want it to be. And so that's, but without a doubt, if they are solving a real problem and giving themselves that test, of do they have pricing pressure, do they have pricing power, and can they specifically identify what they're changing in their customers' lives, then I think they'll be in good shape.
Indeed. Totally appreciate it. I thank you for taking the time to share with us something completely new and being so well versed in it already and bringing it to the marketplace and allowing others to participate in what you found as well as because that takes a certain level of tenacity to carve out what I call a brand new space, even though it's not really new. It's just new in the delivery mechanisms, how it's being done. I absolutely commend you for that. And thank you for taking the time to share with us your knowledge, insight, and wisdom here at the Cashflow Diary.
I appreciate it. Thank you, Jay.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. I'm sure in this episode you have heard in my voice really, really interesting comments and thoughts because I am genuinely intrigued on this. And I'm just like, you know what? This probably is something that you can put a little bit of extra money in just because it's fun. It's novelty for sure. But more importantly, it's backed by solid numbers, by people you might even be listening to right after this episode. But here's the thing. None of it matters if you just sit around and listen and look and do nothing. So get on over to Royalty Exchange today. It's been fun talking to you guys today. I look forward to talking to you soon. Until next time.